Glad to know you're still with us. Nigeria's gross domestic product, GDP, grew by 3.54% year-on-year in real terms in the second quarter of 2022, an improvement compared to the 3.11% growth recorded in the previous quarter. The agricultural sector accounted for 23.24% of the aggregate GDP, while the industrial and services sectors contributed 19.4% and 57.35% respectively. In real terms, while the oil sector dipped by 11.77% year-on-year, the non-oil sector contributed 93.67% of the nation's GDP in the second quarter of 2022. Well, to join us in talking about this one, we have Jabri Ogbe. Jabri Ogbe, let's have your take on this one. Talk to us. Has this data had any impact on the market so far?
Well, yeah, you know that we can't really say we have seen the real impact because...
Okay. Yeah, do go ahead if you can hear me. All right, I guess we're having a challenge connecting with him. Mr. Garba, if you can hear me, let's have your thought on this.
Yes, I can hear you.
All right, go ahead.
Yes, what I will say, we thank God that the GDP closed positively with a marginal growth compared to the Q1. But when you look at the real drivers, that is the agriculture decline, the manufacturing sector decline. The only sector that improved this marginal increase is because there was an increase in the oil sector, even though it closed negatively, but it improved by more than 50% compared to the Q1. So improvement in the oil sector, is that what led to the improvement in the entire GDP? My concern, we need to face the reality that we want to see improvement in the agricultural sector and manufacturing sector, because increase in the GDP will address the issue of unemployment and underemployment, and the economy will be better off.
All right, thank you. I see you were nodding your head. Let's have your take on this.
Yeah, can you hear me?
All right, okay. Yeah, go ahead, Mr. Tunde. Yeah. Yes.
All right, what I'm trying to say is this. Number one, the economy itself had the challenge of revenue. Then number two, the market is actually having its own challenges. There are several things that are making the market unattractive on its own. Because if you look at the coming election, the rates and all the things, those are the things that are actually affecting the market. If you check the GDP, you will see that the services sector contributed over 50% to the GDP. So what we are saying is that it's not as if the economy is not doing well, but there are more challenges that needed to be taken care of so as to see the effect in every sector of the economy.
Talk to us about these challenges, really, so that at least we can see the effect on every sector of the economy, like you said.
Number one is that the rate increase around the world is making the market less attractive. Number two is that the coming election is increasing the risk around the market. Of course, usually when earnings begin to come in, you will see that the market will begin to go against fundamental. But as we speak, because the risk around the market has increased due.
Okay,
then again, based on the rates, you will see that many people are pulling out of the market to fixed income market and others. So these are the major challenges that the market itself is passing through at the moment.
All right, thank you so much. Well, just to wrap up this particular session, Mr. Garba, let's have your thoughts now. What's the impact this will probably have, or what's your advice for investors looking at these figures?
Well, for me, I see different. Because one, if you look at the current market, domestic control about 83%. And who are the domestic? We and the PFs. And we understand our trade. We have no doubt over the election. And the election is not threat to the capital market because either of the two major parties are going to be friendly with the market. So we expect to see more privatization coming, so the people should have no fear over this. The election will come and go, and there is continuity with that. Secondly, the dividend yield. The dividend yield by most of our companies are in double digit, which you hardly get it anywhere in the world. And this gives you the confidence that you better even hold your stock. Even aside the price appreciation, the dividend you will give you 15%. GT is trading less than 20 naira. It is giving you 3 naira. That is 15%. And then forget that the major player are the PMs, and the PMs have no withholding tax. So they get their full dividend. And if you can invest and earn 15% dividend yield, even without price appreciation, is good confidence enough than to place your money in the money market and get 12 or 11%. So I think that is not the major. Always our market has this fear of election because the foreign investors are the major player. But today they are not, so we have no fear with that.
All right, thank you so much. Well, let's look at Access now. Access Holdings PLC has announced. Please hold on. We're moving on to another segment.
Okay, sir.
Can you hear me, sir? All right, thank you so much, sir. All right, so now we're talking about Access Holdings PLC. It has announced that its subsidiary, Access Bank PLC, has completed the divestment of its entire equity interest in Access Pension Fund Custodian Limited to First Pension Custodian Nigeria Limited, a subsidiary of First Bank of Nigeria Limited. The agreement is regarding a proposed purchase by First Pensions of the entire share capital of Access Pension Fund Custodian Limited, held by Access Bank PLC. In a related development, Access Holdings has received regulatory approval to acquire a majority equity stake in First Guarantee Pension Limited. The group believes the transaction is pivotal in its plan to evolve into a financial service holding company positioned to gain relevant scale across Africa, global monetary centers, and beyond banking verticals. This is for you, Ambrose. Now, we see Access Holdings PLC divesting from the custodial arm of its business, and in the same breath, it's said to acquire a majority equity stake in First Guarantee Pension Limited. Like I said, this is for you. What is this about?
Yeah, actually, if Access is still swallowing some company or it does entering into new market, I'm not surprised because they have shown track record that they can manage.
But why is it divesting from Custodia?
Let me finish.
All right.
Access have shown that yes, they are good in acquisition. They understand the terrain. Access, selling, as you just said, the custodian, and also entering into First Guarantee pension. They know the dynamics of acquisition. That has been their pattern of expansion. If you look at their top line, it's just because they are eating to new market. That's why they are seeing that kind of a huge top line. For me, Access is just certain to move. We have seen Access figure trying to match those first-tier banks before now, especially the top two, telling that Access is already on the way. For me, I believe that what Access is doing is trying to consolidate their move into a holding company, and that is good for them. That means they will be in the pension market, they will be in banking, they will be in other related businesses to build their portfolio. For me, Access is just on the move. And for those that are designing, like Alhaji said, that our market is not driven by foreign participants. Yes, if our election is closer, for me, I'm happy that the dynamics of the election is going to be different from all we have seen in the past in Nigeria. If that is what we're expecting, I believe that election will give us a good market and a good rally. For those that are designing, this is the time for you to be buying this company that has good fundamental. And also, if you look at the earnings that are coming, look at where we are coming from in terms of post-COVID-19 activities. It is now that many companies are breaking out, and also they are largely just because across the globe we are seeing inflation eating to the purchasing power of people. If not, I will tell you that this will be the kind of a wrong year for the whole world. But because of what is happening in Ukraine and Russia, and also the continued rise in the price of goods and services, why the central banks of the world are also increasing rate to kind of control this inflation. That's why we are seeing the kind of missed economic data and people and the volatility in the market. But I believe that with time, if peace can come in Ukraine, and we start seeing things coming back. But another thing is that your environment, your climate should determine the kind of policy you should adopt. Not because the mature market are going to tighten, you want to go and go tighten. If you look at what is happening around me, is it because we're having a physical policy challenges that, or is it that we can address our insecurity for us to have a good, produce, good goods coming from the farm that will help us to manage that? These are things that, for me, it's not only looking the way of rate hike should the MPC should be looking at. Which other strategy can we take at this point to make sure that our inflation comes down? But I believe that because inflation almost hitting 20%, we don't expect CBN to keep quiet. They might see another way of trying to cushion. But I believe that the two back-to-back rate hike should also slow down in the next meeting. Let them see the impact of this before they can think about. I believe that our market is very, very right for design investors to know what to do. One, I will tell you that in the fixed income market, no matter the yield they are seeing, you can't hedge anything against inflation in the fixed income market. Whether you are earning 15%, 13%, you are seeing a negative return. For that, the only way you can hedge against inflation is going to some sector in equity market where you are still expecting to have interim dividend or full dividend and also capital appreciation. You can't know, but if you're already in the physical market, I know that market is wide to take trillions in there, but that is not the best way. Those that are retail investors like me and you to go, because it's for those big banks to the board. If you want to really preserve your money, going to holding cash as now is just very risky. Going to those things that can use to hedge inflation is very risky. That means look for assets that we can use to hedge inflation.
All right, thank you. Very quickly, let's have your thoughts.
Yes.
We've said a lot of things, so let's just have your thoughts.
Yes, I think we are still talking about assets, acquiring and disacquiring again.
Exactly.
He is correct. Assets has, I would say, I give them kudos. Even from the time of Ike Mokwede, people are forgotten. Assets acquired Intercontinental Bank. Assets acquired Diamond Bank, if I'm correct. Yes, and you can see that they have shown that, yes, in that area of investment banking, they are very good at it. Now, them now coming to divest from a custodian and now investing in a PFA. I think that's also very good for them because they want to show that, yes, they are a one-stop shop financial supermarket. But for a custodian, what does the custodian does in the pension market? They just keep the assets, while it is the pension fund administrators that really run the business. But for any investment that want to be made, it is the custodian that will do all the payments, but the administrators will advise them based on the acts as establishing this pension.
And it happens on the economy.
Of course, it happens to the economy, So I think access going to that space is very good because all the other banks that are already holding companies are already in that space. So access coming to patronage to play in that space, I think it's going to give those other players a run for their money.
All right, as always. Well, now Fidelity Bank PLC has entered into a binding agreement to acquire a 100% equity stake in Union Bank UK PLC. According to a disclosure signed by Ezinwa Onwegbuche, the company secretary, on the proposed acquisition of a 100% equity stake in Union Bank UK PLC by Fidelity Bank PLC, the transaction is subject to the approval of the Prudential Regulatory Authority of the United Kingdom. Fidelity Bank said the development is in line with its expansion drive beyond the Nigerian market to enable it to deliver to its growing client. Well, apart from earning Fidelity Bank direct access to the United Kingdom markets, which would be difficult if they were to apply afresh, what more does the bank stand to gain from a company that had since discontinued operations because of the losses it recorded? Mr. Dario, let's have your thought on this.
All right, like you have rightly said, is an advantage for them in the sense of in the area of listing. Of course, if you check it, although the bank is not doing well, and that is why they are selling the business. You see, even in Nigeria, anytime we add that any company is buying into a dying institution, what we do is to position, because we know that whoever is putting his money into a business is not putting it to come and play games. It's going to do well. So whatsoever negativity they have as their record, we want to believe that it has been well calculated before they decide to take position. And again, the bank, whichever way you look at it, they have the network, they have the branches, they have the locations, they have the customer base that they can build on as they enter into the business. So if you check it out, it's a good opportunity for them, and it's a very good start for Fidelity Bank as far as I'm concerned.
Yeah. All right, that's your thought. Now, very quickly, I'd like to hear what Mr. Garba has to say, because this move is expected to align with Fidelity Bank's strategic plan of expanding beyond the Nigerian market. So I'd like to know, what are your own thoughts? Do you think it's a good move, seeing that the bank in question is making losses?
Yes, it is good, because you can see the market reflected it. Before the no objection letter, Fidelity was trading less than 3 naira. Today, as I'm talking to you, it's trading at 3 naira 40 kobo. That means getting to up to 13% is just a week. And what gives it that for first performance? Fidelity have declared over 80 kobo debt earnings for just half year, meaning that they can declare 1 naira 60 kobo or thereabout. Don't forget, among their colleagues, is the most generous in paying dividends. It paid 35 kobo last year. For the first terminal, it's now declaring 10 kobo interim dividend. So with this acquisition and with this 10 kobo declaring dividend, it gives you the hope. And I can tell you, it's just a matter of a year, you see that Fidelity will move from where it is to the other group. And you know the group I'm talking.
Yes.
I'm talking of the first bank. And definitely Sean is saying that. And I think that for giving a try to the losses, yes, losses recorded by the past, maybe because the way and manner they handle it. I believe Fidelity have the capacity, the ability to do it different and to turn it around. All other banks that have offshore branches are not doing bad.
Exactly.
So Fidelity will be the same.
Yes.
All right. Thank you so much. Well, I think at this point we need to take a break. And when we return, we'll turn our attention to the second quarter earnings of brewing companies. Stay with us. Don't go away.